For those wondering, there's no AI data centers built up by 2030 without rare earths. Power is a separate issue, but rare earths are a necessity. Like, for everything that's happening in the Western world, and especially in the US, hopefully in Canada, you need this stuff. And how rare are rare earths? They're needed for everything. The US needs them for their own defense. This is a major battle we're witnessing right now. Everyone's playing the little cards to see what's going on. And as a sign of the times, look what JP Morgan earlier this week, October 13th, so a week ago, announced. JP Morgan is launching a $1.5 trillion initiative to boost critical industries. I just want to repeat the number. $1.5 trillion initiative. Look, it has become painfully clear that the United States has allowed itself to become too reliant on unreliable sources, AKA China, of critical minerals, products, and manufacturing. They're going to go and build out robotics. They're going to build out battery storage, grid resilience, distributed energy. Remember our big themes, the trends? They're going to focus on AI, cybersecurity, and quantum computing. This is not a small number that they're announcing. And here's my favorite summary to summarize this section of our talk up. It's a little wordy, but stick with me. Luke Gromen is one of the best. He says, with all due respect to everybody talking like this, they're summarizing a view held by the Wall Street Journal and by many US investors that think we vastly oversimplifies what is actually going on that is driving gold prices higher, and which is our view that is likely continue to drive gold far higher in the coming months, quarters, and years. It's not simply unease about financial markets, but, then the bottom point here, because the US now finds itself having been wrong about its 40-year economic strategy that it can be summarized as long US dollars, US treasuries, and service jobs versus short commodities, factories, and gold. While China has spent the last 20 years taking the other side, going long commodities, long factories, long gold, and short US dollars and short US treasuries. Now the US suddenly realizes it pursued a penny-wise, pound-foolish economic strategy that leaves it dependent on China for its military and weapon production. This is a wake-up call. But the fact that the US offshored so much of its industrial base to China means the US cannot reshore to fix this without spiking inflation. They're broke. How are they going to build all these factories and redo these shipyards without spiking inflation? The next wave of all of this stuff is going to be wild, to levels that blow up the US Treasury market unless US policymakers engage in some form of yield curve control, so buying bonds and buying debt, printing more dollars to do it, but at least it keeps interest rates low so that they can try to keep the game going. On top of all of that, AI appears to be accelerating US service and white-collar job losses after the US spent the past 25 years sending manufacturing jobs to China in favor of the cleaner and higher-paying service jobs, suggesting a structural employment problem in the US that may require some form of UBI, Universal Basic Income.